Good morning, everybody. Welcome to today's training workshop. We got some good speakers coming up after me as well. But, today I want to talk about strategies for day trading with order flow. And, as we've seen the past week, the markets have been going bonkers. We're getting massive moves up and down in both directions, pretty quick, on, when was it? Tuesday night into Wednesday. We had a 50-point move just in the S&Ps within the first 45 minutes of trading. And I'm going to talk about that move, and sort of how you could have used order flow to take advantage of moves like that, and not only take advantage of moves like that as they're occurring, but as they reach their apex and the market starts to turn and form a reversal. So in today's training, you're going to discover why order flow analysis gives you an edge over other traders by showing you data other traders don't see. I'm going to show you how order flow allows you to see actual strength and weakness in the buying and selling that's going on in the marketplace. And I'm going to give you actionable methods to analyze order flow that you can use immediately. Now, for those of you that are brand new to one of my presentations, just a very quick, brief summary of who I am. My name is Michael Valtos. I've been involved in the futures trading world for over 25 years. I literally started at the bottom of the industry. I started on the CME floor with Dean Witter Reynolds as a runner. And eventually I worked my way up. I left the trading floor when electronic trading started taking off. Then I joined eventually EDF Man, the big English trading company that's been around for over 250 years. I'm a licensed Eurex trader. I got my license when I was at Commerzbank, the big German bank. After Commerzbank, I joined Cargill. I was head of futures trading at Cargill in Chicago, and they even sent me out to Singapore to set up a trading desk there when the exchange floor was closing. After my time at Cargill, I spent 8 years at JP Morgan as vice president of futures trading. And these are all trading jobs, right? It's not sitting in an office, telling people what to do or watching, going over Excel spreadsheets and things like that. No, it's actually on the trading system connected to the exchange. And after I left JP Morgan, I formed my own company, Orderflows.com, where I'm an independent trader as well as software and education provider. We developed a software, an order flow software specifically for finding the nuances in the order flow, as opposed to just having software that formats the order flow so you could read it. We took it a step further and created basically a Swiss Army knife of trading tools based around order flow. And the reason why I'm telling you this is because the charts you're going to see in today's presentation are formed using my order flows trader software. Now, however, right, if you're using another software that has a footprint chart, you can use what I'm teaching you today on your existing chart. But you're going to see how easily and quickly you can apply order flow analysis to your trading to make better, more informed trades, because that's what you want to do. Now, if you stay around to the end, I've got a special treat for you. I'm going to show you how to download a copy of my book, Trading Order Flow. I wrote this book after I left JP Morgan. I wanted to give back to the trading community. It's 150 pages long. You're not going to get, the hardcover that you see here. You're going to get the digital download. But it's really a great starting point for anybody that's interested in order flow and in trading in general. Now, again, like I said, we created the software to help making order flow analysis easy. And as you can see, what many people have said, the order flows trader software is very helpful because they can clearly see now what's happening in the markets, right? Another guy says, if you really want to trade properly and understand what on earth is happening in any markets, order flow is the path forward. And with Mike's experience and explanation, it clicks, right? And that's the whole point of doing these presentations, is to introduce you to new ideas, new ways to look at the market that probably you never thought of before. And what separates winning traders from losing traders is not having an edge. But really, what is an edge? Well, it's a piece of information that other traders don't have, or something they don't see happening in the market, right? Order flow gives you that edge because now you have the information other traders don't have. We're living in a world, an information age, and that's where you're going to get an edge. So you're going to be able to see things happening in the market that other traders don't see, such as, market sweeps or market imbalances, or markets getting weaker or markets getting stronger. Now, before I jump in, just a brief disclaimer. Do understand that trading involves risk, right? You shouldn't be jumping into the markets unless you have risk capital, which is money that could be lost, without jeopardizing your security or lifestyle, and only risk capital should be used for trading, right? I know some people, they like to jump in thinking, oh, I got to learn how to trade in the next 2 weeks, otherwise I could get a job. That's not how you want to approach trading, right? You approach trading, from a methodical standpoint, because if you become good at it, it can provide for you nicely. All right, so in order flow, there are, 3 building blocks. And I want to go through the 3 building blocks, which is delta, point of control, and imbalances, and show you how you can apply them, in everyday usage of the markets. Now, what delta is the difference, the net difference between aggressive buyers and aggressive sellers in a bar. Now, every bar has a delta, right? And oftentimes you're going to see it on the bottom. Some other software likes to put it on top or the bottom. I like to keep it neat and clean and just show it on the bottom. And what you're going to see is either a positive number or a negative number. If the number is positive, that means there were more aggressive buyers than aggressive sellers in the bar. If the delta was negative, you can see the first line here, the red area is telling me that it's a negative number, then there's more aggressive sellers than aggressive buyers in the bar. And generally, not always, generally as the market is rising, it's going to rise on more aggressive buying than aggressive selling. You're going to see positive delta, just as if a market is selling off, you're going to see negative deltas on the move down. Now, there's going to be times where the market spins around, like right here, right? The market just stopped right in this area. And this is important to know as a trader, what's going on in this market, right? Why are we stopping in here? Well, let's just break it down. This is from yesterday morning, just after the cash opened. And immediately there's a lot of selling coming in. You can see the strong negative deltas, minus 900, minus 500, minus 1,000, minus 300, minus 1,200, right? Very strong negative deltas. You're sort of expecting this market to continue selling off. Why? Because the aggressive sellers are in control based on the delta. Obviously, you got red candles, so the price action is down. But then the market just stops and goes sideways here, right? And then it rallies. All right, so what can you take away from the delta? Well, I know I've got very strong selling, right? I see minus 1,000 in the delta, minus 1,200 in the delta. Now, this is an E-mini 1-minute chart. But then you don't see it anymore, right? You just see positive 163, negative 107, negative 291, negative 15. So now I know that, yes, I had very strong selling right off the bat. The selling is no longer there, right? But I don't necessarily see strong buying yet, right? I see small back and forth action. I see positive 163. I see negative 107, right? Then I see 291 negative, negative 15, which is very small. And then another bar with some strong selling, minus 700. Okay, so some selling is coming back in. But then it follows right back with another bar with positive delta of 126, followed again by negative delta of 392, small negative delta minus 96, and then positive 28. So in this area, right, you're seeing relatively small deltas, except this one bar is plus of negative 772. But buying is more or less equal, right? Markets are always trying to find value, and in terms of value in the market, value is an area where people can transact, right? Where it's sort of a fair price in the market. Here, we're out of value, right? You can see the market is looking for value. You have more aggressive sellers than aggressive buyers. Then it found an area where people can transact, and no one's really in control one way or the other, right? And, people say, well, you got small volumes. No, the volumes are pretty decent, for that time, 5,000, 6,000, 6,000, 4,000, 6,000, 5,000. These are healthy bars. It's not putting in small deltas, with basically nobody in control on very light volume. No, there's legitimate volume going through here. And then the market starts to rally. And what's the clue of this market possibly starting to rally? Again, watching the deltas. You're getting in here with this negative delta, negative 96, which is relatively small. a small positive delta of 28, and then it jumps 450 positive, and then it jumps again 744. So now you know the aggressive buying is getting stronger and the market is starting to rally. That's your sign that this market is going to go up, just as the market was going down on strong negative delta. Once you start to string together some nice positive delta increases from 28 to 450, 450 to 744, that's a clue to you as a trader that the market is potentially going to go higher. Now again, this is the day before, okay? Again, about a half hour after the cash market opened. This is 9 o'clock Chicago time, 9:05, 9:15. You notice the market is it's going sideways here, right? But you got some nice positive deltas, 1,000, 300, 697, 461, 332, 791, right? So you got some nice positive deltas. The market's going sideways. So you got to be wondering, why isn't this market rallying, right? Because sometimes the questions that you should be asking is, I have very bullish information, but the market is just not rallying. It's telling you that there's still some pressure on the market. Then you see the selling come in here, right? Minus 1,000 negative delta, minus 331, minus 191, minus 158. So while you have selling, strong selling came in this bar, this red bar here, as you are going down, 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 the selling is weakening. So you had some decent buying in here, okay? The market quite couldn't pull around, so it's telling you that this sign that, this market could still be weak. And then you saw some strong selling, a little bit more selling, but even as you got more selling, it's getting weaker. It's minus 1,000, only minus 331, minus 191, minus 158, then a positive and a negative delta, right? Plus 470, minus 446, which sort of washes each other out. Then 374, 1,100, 789. Now you got the buying coming back in. Okay, so you had buying here, but the market, tried to rally, then it just got slammed. Now you're seeing the buying come back in. Okay, the market did come off over these next three red bars, and if you're watching just the price action, you're thinking, we're going to go lower. But even though it's ticking down, you still have net aggressive buyers in the market. 71, 231, 754, right before it pops up. I mean, it doesn't look like much on these bars, even the price action has been crazy. But, you're talking this one bar here is, a 10-point bar, right? $500 move in 1 minute on this bar. But that the buying is coming back in here. And even though the market is just sort of drifting down slightly, it comes right back up and rallies, right? So even though you're seeing these three red bars, most people will see, I got three red candles, I got to get short. But if you're watching what's happening in the order flow, you see that actually, no, there's net aggressive buying coming in here. That's probably your sign you want to get long. And think of it like this, okay? It's like being stuck in the mud. You ever been in your car, stuck in the mud, or, I'm in Chicago, sometimes I got stuck on my driveway on the ice and the snow. You spin the wheels around a lot, and you can't go anywhere, right? And that's a bit, sometimes you see that in the delta, right? You got the big positive deltas, and you're thinking, this market should be rallying, and it's not, right? That's your sign that, hey, you know what? Maybe I better get out, put some traction, like put salt down on the road, or, put a carpet under my wheel so I can get some traction. Because if this market, if you're seeing that aggressive buying and the market is not going higher, it's telling you that there's some, a bigger current underway that is, affecting why this market isn't going up. And, if anything, you should think about potentially getting short or not taking that long. Okay. Now, Delta is going to help you with short-term moves as well. This is crude oil. Now, what do you see here, right? You see this market hit the swing high, right? But it's going up on negative delta, right? It's gone up -5, -61, -122. Okay, now it's sort of peaked out up here. So it's coming up here, and you're seeing selling come in. Well, if you come up to a swing high, you see selling come in. What do you expect the market to do? Well, it should fall over. And it did. Again, this is not a big monster move, but it's a move from, more or less 87.15 down to, 86.90, 25-cent move. Then it sort of hits the swing low, sort of going sideways, and then delta starts to pick up 3.52, 147, and it pops up again another 25 cents in the crude. These are very quick trades, 3 minutes, 8 minutes here. And that's how delta is going to help you. It's going to help you see where there's weakness happening in the market right here, or some hidden strength in the market right here. The 352, 147, -5, -61, -122. Sellers are starting to come into the market up here, just as buyers are coming into the market down here. This is, I love this one. This is a beautiful example. This was on Tuesday, right? You have this market hit a swing high, starts coming down, sort of bottoms out, and then boom, it takes off. Now, think of it like a plane landing, right? Planes just don't come in, drop right down. They sort of come in and, drop off their load and then fly off. But as you're coming down in here, okay, you're seeing the delta, right? -31, -44, -175. So it's getting stronger here, okay? So you're expecting a move lower because these are negative deltas getting stronger. You come down in here and again, you get the big negative delta, -372. At the low of the swing move, delta is only -70. Okay, so it's almost like you're coming down in here. Sellers put their foot on the gas, pushed it down, took their foot off the gas. Foot's off the gas already at this point. It goes from -372 to -70 to -27. So the sellers that were here earlier, they're gone already. All right, and you're seeing now, you're seeing aggressive buying start to creep in. +5, +27, +47. So the selling was strong on the way down. Then you got a very strong one, but then it just got weaker, then stronger, stronger. Right? So what do you expect the market to do? The selling's been removed from the market, and now you see the buying come in. That's why the market rallied. Okay, so again, crude oil. This was on Monday, right? We hit the swing high here. Came off, rallied right back up towards that high, and then dropped off. Okay. Now, one thing, when markets take out highs, or recent highs, you expect the buying to get stronger, right? If you're going to take out a high, you want to do it on healthy volume that's increasing, right? That's getting stronger. Instead, we're coming back up towards that high, and you're seeing the delta in this bar is 126. This bar is only 31. This bar is 19. Okay. Well, if we're going to take out this swing high here, you sort of want to see it in the opposite direction. You want to see a strong, a positive delta, a stronger positive delta, and even stronger positive delta as you take out those highs and you keep going higher. Instead, you're seeing the buying sort of dropping off. It's imagine, I'm out and everyone, there's a big rush of people, running up the side of the hill to get to the top. But, as people keep going higher, there's people dropping off. And that's what you're seeing here. You're seeing the buyers drop off. And then what happens? The sellers come in. You got a nice strong negative delta, -63, -104, -55. And then boom, -182. The strongest delta, positive or negative, on this whole page, this whole chart. So sellers are definitely in control by here. But really the sign was, as the market was going up, the buyers were getting less. So if buyers are getting less as the market's going up, the market's probably not going to go up much higher. And it didn't. Sellers came in and the market dropped. So that's a basic way of using delta to analyze, sort of market strength, market weakness, the direction of the market. And, again, if sometimes if you're not sure, which way the market's going, look at the delta. See who's in control. Is one side getting stronger? Is one side getting weaker? Because at the end of the day, you want to be on the side of strength, not necessarily on the side of weakness, right? You want to buy strength, sell weakness. Now, point of control is it's a very interesting tool. And, it's fascinating because, every bar has a point of control, right? And we're all familiar with how candlesticks form, right? Or bar charts form, right? Every bar, there's an open, there's a high, there's a low, there's a close. But really, that's just the surface. There's volume that's traded within the bar, right? You can't deny that there's volume traded in the bar. But not all prices are the same. That's like saying, well, I have a car and you have a car. They're the same because they're cars. Well, sometimes the cars are bigger. Sometimes the cars are smaller. If these two cars met head on, who do you think is going to be the survivor in a crash? Well, the bigger car. Just as, volume in the market, small volume runs into big volume is going to win out. Okay. And again, that's sort of a trap that a lot of people fall into is treating all traded prices the same. Not all prices are traded the same. Some trade a lot of volume, some trade a little bit of volume. This is yesterday, right? This is crude oil, right? Market sold off, okay? And this nice little sell off here from, the 87.80 area down into the, 87.30-ish area. Then it just sort of went sideways, okay? Now, what happened next was the market rallied, right? It rallied about 50 cents. And, as a trader, right, when you're facing this situation here, market selling off, looks like potentially could go sideways. It did. Is it going to rally or is it going to sell off? Okay, because eventually you're going to come out of the sideways action. And in yesterday's instant, it did rally, but you want clues, right? You want something clear that you could wrap your head around and understand that, hey, you know what? Yeah, this market looks like it's about to rally. And you're going to get it in the order flow. Specifically, the point of control, right? The point of control is the price level where the most volume traded. Okay, and you're seeing here, right? You're coming down. You hit this swing low here. You're getting 3 point of controls, more or less the same price. I mean, this one is one tick lower. Then point of controls start migrating higher, right? When you see volume migrate higher, move higher, right? Again, I just sort of explained it on the delta part, right? When your market is going up, right, you're going to do it on generally on healthy volume. Just as if a market is going down, you can do it on healthy volume. Now, in the bar, there's volume, okay? And if the price level with the most volume keeps going higher, it means more and more traders are transacting at higher prices. And if more people are transacting at higher prices, you expect the market to keep going up. Just as if a market is selling off, it's looking for areas where there's liquidity in the market where people can transact, right? And again, every bar has a point of control. And if you start seeing the point of controls higher in each bar, higher, 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 that's your sign. Now, you don't have to wait for, 1, 2, 3, 4, 5, 6, 7, 8 bars of higher point of controls to start realizing, you know what, this market is starting to rally. When you're in a sideways market, you're generally going to see point of controls sort of aligned, right? Again, these are not perfectly aligned. There's one tick lower, but you got 2 out of 3 at the same price, and the other one is 1 tick lower. And then you see point of control higher, higher, higher. That's your clue. This market could potentially have reached its bottom here or swing low, and is starting to migrate higher. The volume is starting to migrate higher, and you should start to expect higher prices. Okay, so somewhere to get in would be in this bar, right? And then what happens? The market jumps up. Even if you got in late here in this, after this bar, meaning you get in on this bar, you're still catching, a decent move, a 20-cent move there. I mean, ideally, you should be getting in somewhere in here or here, getting in, below 50 and riding it at least up into the 70s. Now, again, I talked about Wednesday's reopen, right? The 5 o'clock reopen. And it was just a big run up over 45 minutes, right? We opened up, around the 43.10-ish area. I think it was 08 or so. And then we just rallied basically straight line, straight 45-degree angle up, right? Up and all the way, I think it was up to 60. But what's the clearest sign? I'll talk about imbalances later. That's another clear sign. But you're seeing point of control higher, 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 higher. You know, every point of control is coming in higher. Well, again, you don't need to wait till after 10 point of controls migrate higher. Once you start seeing it happen, higher, 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 that's your clue already. You know, you don't have to, you see 1, 2, 3, maybe 4, go for it, right? You know that where you can hide behind are the previous point of controls, because volume is generally going to act as support or resistance, right? If the market's moving up, look for point of controls, which is your bar with, the price level with the most volume, is going to act as support. And you can see how it came right back within a tick here, with a tick here. It got through here by a couple ticks. Same price level, a couple ticks higher, one tick through it. Again, you can see how the point of controls are acting as support as this market keeps going up and up and up. So that was, that was an easy one. All right. Now here, right, market's selling off. This is Tuesday, around 10 in the morning in S&Ps. Lower point of controls, prices migrating lower, or volume rather is migrating lower with price. The area where a lot of people can trade in each bar is getting subsequently lower, lower, lower. Then it hits a low. Now it starts turning, starts going back up. Right now, all of a sudden, instead of point of controls going lower, they're starting to go higher, higher, higher. And again, you can just, these two are more or less the same. You got to give it a little bit of leeway. You'd love it to be the exact same price or higher. But, within a tick or two is fine. But you're ready. You know that it shifted, right? Lowers. Point of control is going lower on the way down. Now it's starting to go higher as the market starts creeping back up. And again, you can start seeing the deltas positive. That's another clue. But the deltas and point of controls are telling you now buying is coming to the market. People are looking to transact at higher prices. And then the market, again, puts in a nice, 15, 20 point rally within the next 10 minutes. Okay, now, if you're looking just at the point of controls, you're seeing a few things in here, right? Now, again, it's a little choppy in here, but then you're starting to see higher, 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 then just sort of goes sideways, runs into this area where the point of controls are here, then sort of drifts back down, and higher, higher, higher as the market goes back up, right? This is where they're appearing here. Now, again, when you start to see point of controls coming in at the same level over subsequent bars, in this case 4 bars, that's a sign that the market is probably going sideways, right? Which it did. And that's your sign to either cut losses or stay in the trade, depending on what your risk management is. Then you start to see it here, and then it starts migrating higher again. That's where you want to get in on the trade. Now, it was fascinating in the gold market on Wednesday morning, right? You had that big bonkers move in the gold. But what was the clue? Well, the point of controls moving higher, right? It looked like it was going to go higher here. You got 1, 2 point of controls. This is your, what do you call it? Patient 1, or patient 0, then 1, 2, then 0, 1, 2, 3 already. Now, again, not all moves are going to be like this. Sometimes it can just go sideways. But at least you're going to be positioned to catch those moves like this. Now, again, this is yesterday in the S&Ps. You notice, come up here to a swing high, and this bar, it came right back to this level, right? Why didn't it go higher or come in a little bit lower? Well, that's because it came right back up to that point of control level. Now, we've done tests on this, and it's actually very effective, and I wish I could come up with a great reasoning for it, but what we found is when you have one bar as point of control, and then the next bar opens up far away from it, and then it comes right back to that specific point of control, and then moves away, go with it as it starts to move away. So you can see here we opened up 2 points lower, rallied right back up to the point of control, and then had a nice sell-off, right? And again, it's an easy low-risk trade because you're trading down here, 44.33. Your point of control is here at 35.25. You just put an offer up here at 35.25. A stop up here 1 or 2 ticks higher. If it stops you out, it stops you out. If you get filled, great. You can catch a big move for 10, 20 points, and you're just risking ticks, right? You're risking 2 or 3 ticks to catch, full points, which is really what you want to do. You want to be on the right side of the risk-reward ratio. Now, again, something very similar, right? Market going back and forth, and this bar came right back to this level and then shot up. Well, why? That's where the point of control got within 1 tick through it, right? We opened up about 1.5 points higher, came right down to it, overshot it by 1 tick, and reversed and went higher, right? So again, imagine you're just throwing a bid in here. Now again, it has to open away from the point of control, because a lot of times, the bars open and close around the previous bar's point of control, more or less. But when it opens away, comes back, tests it, and then moves away from it, that's your sign. That's your trade. Again, very similar. Why does the bar come right back to this level? Because that's where the point of control was. This was yesterday after the Fed announcement, right? Remember, you had the Fed announcement. Market shot up, came back, it came off a little bit, shot back up. But then this bar came right to this level and then puked. Okay, well, why? That's where the point of control was here. That's where the volume was here, right? Volume, what people don't understand is volume acts as a magnet, right? Again, point of control is the level in the bar with the most volume. And it's the level where in that time period, if you're looking at a 1-minute chart, a 5-minute chart, where traders found a fair price. In other words, the value level in the bar. So hopefully you can see how easily using order flow point of control can enhance your trading. Okay, so the last thing I want to talk about is imbalances. Okay, and we were all familiar with the term imbalances, right? Markets move from balance to imbalance. And you could see here, again, this is on that move Tuesday night after the reopen, right? We shot up from, 43.08 all the way up to about 70. You're seeing the green bars, right? Then you're seeing the red bars. Well, you see one red bar, another red bar. You're not thinking that, oh, this market's going to fall over, because you just had a 50-point rally, 60-point rally almost. And what you want to see clues in the market that this market is probably going to fall over. And as you're looking at the order flow, what are you seeing? Buying imbalances, that's the blue numbers in the bar versus the black. Blue means buying imbalances in the two-way auction. It hits the high, and then all of a sudden you see selling imbalances come in, right? It doesn't get any easier than that, right? Where are your buying imbalances now as you start moving down? You don't get many. I mean, this bar had 4, but it's being overrun by selling imbalances. So on the way up, you're seeing the buying imbalances. On the way down, you're seeing the selling imbalances. Okay. Now, when there's sideways market activity, oftentimes you're going to see both buying and selling balances. You're going to see both, and you're often going to see them in the same bar. But when they start to appear directionally in a bar, that's your sign to go with that move. Now, I'm going to show you an easy way to see the imbalances shift. Okay, because I admit, sometimes I get lazy too. I don't want to analyze every single print that's going through in the order flow. I want an easier way. That's one of the reasons why we created the Orderflows Trader software. And what we do is, this is the same chart that I just showed you. We'll put a box around the bars that have multiple imbalances. Not necessarily stacked imbalances, but 3 or more imbalances in a direction in a bar, right? If it's a red bar, it's got to have 3 or more selling imbalances. If it's a green up bar, it's going to have 3 or more buying imbalances. And again, if you're just looking here, you're not making heads or tails, but now all of a sudden you see the market makes sense. Oh, I just hit a swing high, right here. Now I've got multiple selling imbalances coming in here and here, and the market just falls over. Right? Again, it's keep it simple, right? Don't make trading so complex. This is crude oil, right? This is Monday, right? That nice move up from 82.40 all the way up to 83, over $83. And what are you seeing in here? Multiple buying imbalances, multiple buying imbalances, multiple buying imbalances, multiple buying imbalances as the market's moving higher. Now again, I mean, you can sort of read what's happening in the delta. Maybe point of controls are a bit mixed. You're getting some migrating higher, migrating lower, migrating higher. But then when you start adding it together, you're seeing delta increase here, 27, 41, 66. You're seeing point of controls migrate higher. Then you see the bar with the multiple buying imbalances coming in. That's your sign. You should be long already, right? Again, it don't make trading more difficult than it needs to be. Now here you've got, sideways action, multiple buying imbalances. Okay, maybe you take a long, then it's met 2 bars later with multiple selling imbalances, and the market falls over. So even though maybe you turned bullish here, okay, but then the bearish information came into the market. And as a trader, you have to be able to make that jump from bullish to bearish if the order flow changes. And it did. It changed right here 2 bars later, and you caught a nice move down, right? So maybe you turned bullish here, but then bearish information came into the market. You got to take advantage of that. Don't get married to your position, right? It's another example. Came down into a swing low. Point of control start migrating higher. Multiple buying imbalances in here, and the market started going back up. Multiple buying imbalances, multiple buying imbalances. So, multiple imbalances occur every trading day in pretty much every market. But you need a way to see them quickly so you can potentially trade them once you put them in context of the market. And everything you see should be taken in context of the market. Don't just go blindly buying every bar that's got multiple buying imbalances or selling every bar that's got multiple selling imbalances. Put it in context of the market. And again, that's where having software that's going to highlight this stuff to you is going to give you an edge over other traders. And the way I like to describe it is it's like having a metal detector so you can discover things no one else sees. Right? In other words, you're going to see what's happening in the two-way auction that other traders are not seeing, and more importantly, they're not reacting to. So, over the last 40 minutes or so, hopefully you can agree that this has been time well spent, right? Again, I can't cover everything in a quick training session. I wish I could, but I can't. If you're interested more in order flow, you can always go to my YouTube channel. I've got several hundred videos up there. But I got a special offer, so you can get everything you need to know about order flow. And if you act fast, I'm going to give you a very special deal. So you're going to be excited to know that the Order Flow Trader software, which runs on NinjaTrader 8 and comes with a volume footprint chart with 17 pre-programmed order flow tools. Now, I only talked about one of them, the multiple imbalance tools, but we got tools for seeing market weakness. We got tools for seeing market sweeps. We got tools for seeing price acceptance, price rejection, market exhaustion. A lot of different tools that are going to help you take your trading to a next level. And best of all, you don't need to load templates or anything like that. We set it up so you could just once you install NinjaTrader, you just import and open up a chart and add the Orderflows Trader software to it, and your charts will look just like mine. And normally we sell it for $8.99, but you're not going to pay that today. Now, the best way I can describe it is it's really like taking my trading knowledge, what I've gained over 25 years working at top level investment banks, JP Morgan, Commerce Bank, trading firms, Cargill, EDF Man, even on the trading floor at the CME, and putting it into a program so you can see what the institutional traders are doing in the market. But I realized though, having software is one thing. You still got to know how to use it. So I don't just give you software and send you on your way. I hate that. I buy software sometimes and there's literally no documentation on how to use it. It's just sort of, treading water. Is this what I want to do? Is this how I'm supposed to use it? We give you a lot of education on how to read the order flow. So you're going to get access to my order flow trading course, which I sell for $297. You're going to get access to that for free. But more importantly, I want to take you on a higher level. I'll give you access to my Orderflow Inner Circle video series, which normally I sell for $4.97, and there's 56 videos on advanced order flow tips and analysis. I say tricks, but it's really ways to analyze the order flow that very few people know of. And you start adding all that up together, right? It's close to $1,700. Now, I realize it's one thing to learn from videos and books, but it takes discipline. It takes commitment. We've all been down this route. We've all bought courses, not just on trading, but maybe other things, and we never complete them. Maybe we watch the first couple of videos and just give up. And what I found to be very helpful is live training, where you can ask questions. And for the last 3 years, I've been hosting every Tuesday night live user training sessions, where I drive home what I saw on the order flow for the past week. You could ask questions. You can send me charts. I'll discuss them, on this training session. Now, the archives, I have an archive for this, so if you can't attend, you can always watch the replay. There's already 152 episodes, okay? And, there's people that want to sell you software and then charge you extra on how to use it. This is a place where if you have any questions for anything, you could just come in there, ask me the questions. And again, I talk about different forms of analysis, different ways you can use order flow than you probably thought possible. And you start adding all that together, it looks expensive, over $1,800, but just for a one-time payment, $749, you can get all of that, right? So just go to orderflows.com/oft3, and it'll take you to this page. You just scroll down to the bottom, all right? You just scroll down on the side. You can see the buy button here. You just click on that. It takes you to PayPal. PayPal processes your payment. I don't get your credit card information. I don't want it. And then within, once the payment is processed, we'll send you all the details for the download, your license key, access to the courses, everything. So again, you just got to go to, orderflows.com/oft3.html. I put the link in the chat there. And, as a special bonus, because Anna keeps having me back, which I appreciate, I'll give you access to the order flow playbook for free. Normally I sell this for $297, but in this playbook, right, it's a course on trading, but also I jump in deeper on order flow analysis, and I teach you 10 additional trade setups that you can look for in the market. So to get started, again, go to orderflows.com/oft3.html. I put the link in the chat, and you're going to get the Orderflows Trader software, which is normally valued at $8.99. You get to access the Orderflow trading course, which is $2.97. I sell this every day for $2.97. You're going to get the access to Inner Circle video series for $4.97. That's included, right? You can't get access to that any other way. You're going to get access to the weekly live group training. Again, people charge up to $200 a month for live training. You get it for free. I got people in there that have been using my software for 3 years that are coming in there still, right? It's great. And you get access to the order flow playbook, right? Again, normally it's $297. You can get it for free. So again, it's just one-time payment, right? There's no recurring payments. I'm not going to, hit you up on your credit card each month. Now, of course, you will have to pay your data fees and NinjaTrader fees if you're trading through NinjaTrader. But again, it's a great deal. And, if you want to delve deeper into order flow, my book is available to download. Go to orderflows.com/book.html, enter your name, first, last name, and your email, then hit submit. Okay, then it's going to take you to that next page where you can download the PDF. So you get started now. Just go to orderflows.com/oft3.html. And I think I've run out of time. So Anna, thanks for having me. It's been my pleasure, and I'll give it back to you. Thank you.